Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am your host, Pushpendra Mehta, Executive Writer at CTMfile. We are very excited to welcome back Jack Large, Editor of CTMfile, and Paul Galloway, Senior Advisor at Strategic Treasurer, for today's episode. Jack and Paul, it's time to get some deeper insights from you on our themes for today, namely why gold matters for China, cash and liquidity management, treasury technology, central bank digital currencies, and finally, the crypto crisis. Listeners of this podcast can read these articles and also review a variety of treasury content by visiting ctmfile.com or by following the links in our show notes. Let's start our discussion with the Chinese central bank swapping dollars for gold. Central banks have been major buyers of gold this year, and uncertainty about which of them is behind the move that has fueled speculation that China is a key player and is quietly dumping the US dollar and accumulating gold. One report observes that one of the worst kept secrets in global central banking is the extent to which Chinese officials are swapping dollars for gold. Jack, if I may start this discussion with you, why do you think China is stockpiling gold? Is it to cut dependence on the dollar, or is it primarily driven by a flight towards safer assets amid soaring inflation, perhaps more as an effective inflation hedge?
This move by China, which began many years ago to try and reduce the dependency of the world economy on the dollar, has been going on for a long time. The new feature is the instability in the economy globally, and in particular in the US, where actually their exposure to the US dollar is greatly affected by the interest rates and so on in the US. So it's a natural move to gold. The numbers are mind-blowing. I mean, 300 tons of gold is just amazing. But this is just a natural consequence of the tension between China and the US dollar and the instability of the global economy. I don't think there's anything the corporate treasurers can do about it other than just note it's going on.
I don't disagree with what Jack's talking about here. I mean, obviously, gold is a natural hedge against inflation, things going on in the market from an economic standpoint. It doesn't surprise me that China would be behind buying gold, transferring dollars, buying gold. Seems to make sense. If I was them, I would probably do the same. I don't know that it's them necessarily trying to be sneaky about what they're doing. I think if people are out there with the idea that, hey, they're probably doing this, well, they are doing it, and it's their way of saying, hey, they're out there doing this. So I think, to Jack's point, I think folks, in the treasury arena just need to understand, hey, this is going on, this is what's happening, and just continue to monitor. So it has been going on for some time, and definitely not a surprise.
Definitely not a surprise. The second story for today is about Bottom Line Technologies survey that finds CFOs remain optimistic about cash and liquidity. Bottom Line surveyed more than 200 CFOs who work for companies with annual revenue of more than $100 million. The results are available in the report Data, Vision, and Technology. CFOs find a recipe for success. The report found that chief financial officers are largely satisfied with their view across cash and liquidity, but thirsty for improvement as they look to connect to new technologies and partners that can solve specific pain points. Paul, From a corporate treasury perspective, what would you consider as the key takeaways from the report?
I think it's definitely a positive sign that CFOs are viewing liquidity as still quite good. In a rising rate environment, you tend to see dollars come off the sidelines and be invested in longer term assets. I do believe that's going to continue to happen. But at the same time, what you have is you have your third party partners, your banks that are going back to their balance sheet saying, hey, there's opportunity out here. So we can provide liquidity vehicles to our key clients. And those come in the forms of a variety of tools, whether it's delayed draw term loans, contingent liquidity facilities, revolvers. Those start growing in terms of what's being put in place. So I think from a CFO standpoint, liquidity will remain bullish, or I'll be bullish on liquidity for the foreseeable future. I don't see that being an issue from the standpoint of companies that are looking to tap the markets or have a need for contingent liquidity or liquidity on the sidelines for different types of activities, whether it's M&A, consolidation, whether it's continued product development or opportunities elsewhere. I think liquidity will remain.
The most surprising thing about the results from this survey from 200 CFOs is that I could have written the 4 common pillars among the CFOs without doing that work. Obviously, they wanted a cash flow visibility. Obviously, they want to bridge the gap with their APs and so on, and moving to cloud-based initiatives. Yes, that's all obvious. What isn't obvious is how they're going to do it and what particular things within each of these pillars are they going to use. I was disappointed with the results from this survey, I have to say.
Disappointed in terms of the 4 pillars, Jack, that came out?
There was no surprises. A good survey illustrates surprises, things that you don't expect. And this is just almost repeating conversations that you and I have had with corporate treasurers for years. The issue is, what are they doing about it? And these pillars and so on are just a framework in which they then do things.
Yeah, I think what would have been more interesting, Jack, with this particular kind of survey would have been, hey, what are you doing to ensure that you have liquidity in place? Meaning, are you going to your third-party partners and saying, hey, I want to set up a contingent facility. I want to set up some type of funding, get some type of funding in place, have it on the sidelines for a day that I want to take action on something. Oh, by the way, I'm not going to tell you what I'm going to do with it necessarily, but these are the kinds of things I may do with it. In this survey, they didn't really, it wasn't surprising. But when you start seeing rates rise, that's when companies or CFOs should sit there and go, okay, what does my balance sheet look like today? What do I want it to look like 12 months from now, 24 months from now? How do I position it today for that? I think that's more interesting, and that's not what you got in this survey.
Yeah, agreed.
The next theme for today is Treasury technology. The first story in this section is about Kyriba, a worldwide provider of cloud-based financial services and information technology solutions, collaborating with JP Morgan Payments to unveil a new real-time treasury solution with an innovative API that reportedly provides real-time cash visibility and bank reporting to their mutual clients. The second story in this section is about Wells Fargo unveiling a new digital banking platform, Vantage, to more effectively service its commercial, corporate, and investment banking clients. Wells Fargo's Vantage is designed to meet the increasingly consumer-centric demand of corporate treasurers and SMEs through artificial intelligence and machine learning technologies. Paul, from a corporate treasury perspective, what do you find interesting in the Kyriba and JP Morgan Payments real-time treasury solution? And what do you also think of Wells Fargo's digital banking platform Vantage?
Yeah, starting with JP Morgan and Kyriba, this is something that's been coming. I mean, it's been coming for some years now. The direction of payments is gearing straight towards us. Getting to this point in time, I think, is a huge step forward. It's something from, as a treasurer, this is something that I welcome, that the first steps are happening, that we're starting to see this being deployed. And what I think is going to happen is over time, we're going to have an adoption rate that starts increasing. It'll probably be slow for a little bit, but I think adoption will eventually accelerate at a very fast pace. It's something that's needed out in the market. So great step forward, I think. When we look at Wells Fargo's Vantage, the digital banking platform, the one thing, when I read this and I was thinking about this is, I'm going to go to what I said about adoption rates with real-time payments. I think adoption rates with this are not going to be the same. I think we're still at an influx where demographics matter, and the adoption rate of something like this, a platform like this, may not be exactly what they're anticipating. So we still have plenty of demographics out there that don't necessarily gravitate towards digital platforms. We do have a growing demographic out there that will go towards this. I'm kind of in between. I don't carry much cash. I don't like to write checks. If I can automate it, I do. So for me, I kind of like this. I like digital platforms. I like going somewhere where I don't have to have paper and I have to have something in my pocket to make something happen.
I'm afraid I'm going to be the disappointed one again here. The Kyriba initiative with JP Morgan is inevitable. It's been coming, as Paul said, for years. The interesting thing is how corporates are going to use it. Because, for example, in their list of benefits from the API, they say increased efficiencies and cutting payment costs by some 83%. Well, yeah, but that's not really where the problem is. That's not where the cost is. The cost is, as we were talking about earlier, was having liquidity in the wrong place, is not investing liquidity and so on. These are marginal. The other thing that's not covered here is that real-time treasury requires a new generation of treasury systems that can cope with this immediacy of getting your liquidity. So, for example, you get a payment for $50,000 in the middle of the weekend. How do you deal with that? Those are the issues that, for me, are much more important. And the Vantage package from Wells Fargo is just them trying to catch up with the rest of the market who already got their suite of programs all linked up. Here, the issue is, how do I use it? How do I make money out of doing this? What do I get? It's two very similar sort of technology developments without a real delivery point, in my opinion.
Yeah, I'd like to go back to the real-time payments because, Jack, I don't disagree with what you're saying. The infrastructure still is not there, but I do think this is a good step forward. And when it comes to costs, those lower costs aren't going to be realized until adoption rates are much higher. Because the cost right now is still quite high for the transaction itself. But once you get to a point where you have lots of traffic, then all of a sudden the costs do go down. So you'll get cost savings. But to your point, how do you have a treasury management system or a group of treasury systems in place that can deal with payments that are happening on the weekends and in the evenings? How do I manage dealing with a payment that happens at 1 a.m. while I'm sleeping? Yeah, those kinds of things absolutely have to still be worked out. So there's still a lot of things that have to happen to make this really effective. I think it's a good step forward. Still a lot more to do.
Still a lot more to do. Let's move forward to our next topic that revolves around central bank digital currencies, or CBDC. Indonesia's central bank has revealed plans for a blockchain-based CBDC. The decision is reportedly in line with central banks around the globe that are creating CBDCs either in the form of retail tokens for use by consumers directly or wholesale tokens for use by banks in the financial system. Here in the US, I interviewed Jennifer Lasseter, Executive Director of the Digital Dollar Project. Jennifer said that the US has taken a deliberative approach to CBDC development, and with good reason. She said, given the dollar's role as the world's reserve currency, we do not have to be among the first countries to develop CBDC, but if we do decide to issue a CBDC, we must get it right. In addition, Jennifer said, we encourage CFOs and corporate treasurers to consider a digital dollar's potential to act as a catalyst for private sector innovation. Jack, 105 countries representing over 95% of global GDP are exploring a central bank digital currency. Do you think CBDCs can be a game changer for corporate treasury in the long term, particularly for cross-border payments?
Yes, I do, but I really do need to compliment you on this interview. Jennifer Lasseter is very, very cogent. I highlighted one of the things that she said about CBDCs. We've got to bear in mind that by defining and testing real-life cases, then we've got to be sure that they work. And this is a very senior person saying fundamental things. I think this is very important because globally, the dollar isn't going to be replaced that much. So when the US dollar moves into CBDCs, it is going to have a significant impact on the money flows and so on. It's easy to see corporate treasurers saying, well, I just need to set up an account in my accounting system that just accepts CBDCs at shops or wherever else they're used. Yes, but it's more than that. It's much more than that. And there's going to need to be a lot of thought in it. The other thing that I thought she was so brilliant on was saying that one of the biggest problems is the access to the CBDCs, because 20% about in the UK and more in the US, I understand, of the population doesn't actually use anything but cash, notes and coins. And these people are going to be isolated if we move in some way to this new form of digital currency. Anyway, I found that very important. The other feature of the couple of items in the CTMfile was this feature on Indonesia. And what's interesting about that, from my point of view, is that they are ploughing ahead almost regardless, just because I get this feeling they want to be first, or very soon after China, because China's already there. But the implications that Jennifer Lasseter was talking about don't appear in this item at all. I'm not sure how much of that they've really thought about it, because if they had, they would have positioned the press release very differently. Anyway, congratulations on an excellent interview with Jennifer.
Yeah, Push, great article. Definitely agree with the comments that Jack was making. I think the one point that Jack brought up that I had in my mind as well was around, there is a certain demographic that uses cash purely. Even with all the technology we've had over the prior decades, there's people that just refuse to adopt easier transfer of funds. They prefer cash. They prefer anonymity. They don't want corporations and other people to know or have knowledge of what their behaviors are. And having cash, paper currency or coins in your hand, you can do that. What do you do if you get to a point where you introduce CBDC and it becomes, well, hey, we're not printing paper currency anymore. We're not making coins anymore, and we're going to take them out of the market. So you're going to have to use this now. I don't know what's going to happen with those folks out there that are going to say, well, I refuse to do that. I don't know how they're going to transfer funds if they don't go that route. So, they're going to be forced to do it.
One of the aspects of the Chinese digital currency is that it's not anonymous, which is really crucially different.
Yeah.
In an economy, in a society like China, maybe they can live with it, but sure as hell, I don't think Jennifer's going to get away with suggesting anything like that in the US.
I wouldn't think so, right? Yeah, I don't see how you could. I think people in the US would have a lot to say about that.
And it wouldn't be very polite.
It would not. It would not.
I couldn't agree with you more, both of you more. I think privacy, security, scalability, trust, reliability, financial inclusion, or economic stability, monetary stability are all important factors which I think policy makers and decision makers in the US and the UK are going to be watching very closely when it comes to exploring the CBDC.
But there is one point we need to emphasize, that CBDCs are coming. Corporate Treasury can't ignore them. They have to work out how they're going to accept this currency and how they're going to manage value within that stream of payments. It's going to be very interesting indeed, but it's coming. There's no doubt about it.
Yep. Agreed.
Absolutely right. Our next theme for today pertains to another form of digital currency, cryptocurrency, which continues to face a crisis of confidence, even as cryptocurrency lender BlockFi has filed for Chapter 11 bankruptcy protection along with 8 affiliates in a New Jersey court. BlockFi is the latest casualty since FTX's collapse earlier this month that triggered instability in the crypto market. Paul, will BlockFi's bankruptcy mean increased, stringent, and uniform regulatory scrutiny? And do you think it may also spark a broader contagion in the crypto markets?
I believe that there will be some regulatory constraints that will be put in place. I don't see how there wouldn't be. But, just thinking about cryptocurrency writ large, it's not going away, in my opinion. It's not dying. I think what we have here is, we had an explosion in the crypto arena. We didn't have anything that allowed for failure sooner, and we have some failure now. And so the ones that are able to survive through what's happening today, those are the ones that are going to be sticking around longer term, at least in my view. So, am I surprised that we have this going on? Not really surprised. I kind of always anticipated that something might happen. When you think about DeFi, CeFi, DeFi is not going away. I think it's a future platform. I think the direction and the things that cryptocurrency has brought to the markets, it's getting people to think of finance and the value proposition in a different way. And so when you have new things like this, there's lots of uncertainty, and you have sometimes major bumps like this in the road. So it's a squiggly line. It's not a straight line. It's a squiggly line to get from A to B. And we're seeing a lot of the squiggly right now. So, not surprising to me.
I wouldn't invest in anything that's squiggly.
I would agree, Jack. I think, several years ago, Warren Buffett made the great comment of, I invest in things I understand, and I don't understand cryptocurrency. And, I was right along with him, right? I'm getting a better understanding and appreciation of it today. But, as an investment, it's not something I feel comfortable with yet.
If you're a corporate treasurer, this issue is not going away. the crypto existence of crypto, the idea is out of the bottle, and we've got to manage this. Certainly there needs to be, from the regulatory side, the central bank side, from the bankers, there needs to be much more regulation and control over the exchanges and so on. But the other problem from the corporate treasurer's point of view is that already we're starting to see payments made in cryptocurrencies, in Bitcoin, for example. Not very big volumes yet, but it's coming. And, well, as far as corporate treasury is concerned, in some ways, it's just a different currency. It's another currency to add for the 40-odd currencies that one of my friends deals with. But he's saying, I'm not going to invest or put any of my time into it until it's stable. And then I'm interested. The issue is stability and security and trust, as Jennifer was saying in her article. The corporates need to trust it before they're going to accept it as a currency for payment. But the issue is there. There's no doubt about it.
Yeah, definitely, Jack. I know treasurers that have cryptocurrency on their books today, and it's a reality.
Finally, I would like to wrap up this conversation by seeking your opinion on your choice for the biggest or most important story of the past week and why. Jack, if I may start with you.
I'm going to say there isn't a single story individually, but there is a single story, which is that global instability is driving new exposures and new ways of doing things, which is inevitable. And this is the role of gold, but similarly, the role of new currencies like the cryptocurrencies are asking questions about what the corporate treasurer is going to get involved in. That's the other part, is what are you going to accept and what procedures and things are you going to get involved in. It's all very well having new technologies, but it's how you're going to use them. How are you going to survive and make sure there is a continuity in your business? That, for me, is this key issue coming out of this for me from this podcast.
You know, the thing that just pops out in my mind is the most recent economic reports that come out around inflation and prices. Yeah, and we've seen a little bit of a downtick. People are seeing that the Fed is looking at perhaps a lower rate hike. So we could be entering a period of lower rate hikes, maybe 50 basis points coming up here. You know, that's interesting to think about. The Fed has a history of either overcorrecting or undercorrecting. And, you know, it's a hard game to play in their position. So the next 6 to 12 months is going to tell a lot. We'll see where inflation goes. You know, we are seeing an impact on jobs. What they've been doing with the rate hikes is starting to work. See if a downtick was right or not.
That was summarized rather cogently and eloquently by you, Jack and Paul. Both your comments, I hope our audience, paid careful attention to them, because I personally thought they were very insightful. Thank you so much, Jack and Paul, for your time and for your informative analysis. We would also like to thank our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.